This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, we've packed a number of shows together to give you some highlights. I know you're going to enjoy the show. Thank you for being with us today. Welcome to the show. Honored to meet you and to have you on. I know something that's important to you is finding that one thing and the process of that. I'm looking forward to help, for you to help the listeners with that as well and what that means. But before we do, who's Andrew? Give us a little more on your story, real estate. I know you have a farming piece to this whole operation as well. I'm looking forward to hearing about that too.
Yeah. Well, first off, thanks for having me on. It's an honor. Really appreciate it. And my story goes all the way back to North Dakota. Actually, my family founded a farm there back in 1901. My brother and I were fifth generation. We grew up on the farm. I grew up to five siblings. There's six of us. And I farmed actually full time until 2014. And I did this other real estate investment stuff on the side, starting in 2009 when I was in ninth grade in high school, about 13. And by the time 2014 rolled around, so a few years after that, realized that it could be a full-time gig. So I actually had to retire from farming at the ripe old age of, gosh, what was I, like 20, and focused 100% on what we do now, which is Abernathy Holdings, and focus on self-storage and real estate.
Wow. So
That's a quick version.
that is a quick version. Your family founded this farm in usually 1908, 05, something like that.
Yeah, 1901. Yep.
1901, and you're fifth generation. Are the other siblings going in your path as well? Are they all farming or?
Yeah, good question. My parents have been awesome about helping us follow our passion. So like when we were at a dinner table as kids, my dad would throw out topics, and whatever topic our eyes would brighten up and we'd cheer up and we'd look, he would realize that that's something we were passionate about. So they led us all down different paths. My brother farms. I'm in real estate. I got a sister that works at a church. One's a doctor. One's a teacher. So
Okay,
you can about imagine we were all taught to follow our passion, not the money. And that's made us all very happy.
that's awesome. That's awesome. Why just I could kind of upset the family structure here, right? You're the fifth generation. Somebody's got to keep that rolling.
My brother's doing a great job, and I did stay partnered. We're still 50-50 in the farm. I just became a non-active employee in 2014. So I'm still involved, but not every day.
All right. Well, so speak to the transition to real estate then. Maybe what turned you on to, hey, this may be something I'm really passionate about, or knowing about this thing, or maybe that's getting to the one thing you're talking about. But yeah, what steered you away from farming?
Yeah. I mean, I actually didn't learn or find my thing until 2017. And so this whole path was me doing a lot of things. I mean, I was young, started at 13. I mean, the first thing I did, I had $4,000 saved up when I was 13 from running grain cart and combine. And I threw that into the stock market in 2009 when it crashed. And I didn't know what I was doing. I mean, I was buying, but I was lucky. Ford at 90 cents, Bank of America at $3. And I was able to turn the $4,000 to $80,000 by the time I was in 10th grade in high school. And so that was a nice launching point for me.
Wow. Who told you to invest in the stock market and even how to do that at
When
13?
I was 10 years old, I actually really, you could tell I really enjoyed numbers. That was one of the passions at the table, at the supper table. And so my dad really involved me in marketing grain and commodities from 10 to 14 and learning how that all worked. And so when the market crashed when I was 13 in '09, I recognized it. It was intriguing to me. I didn't know what the market was at the time, but it was all over the news. And I was always a curious kid. So I dove in and started reading about Warren Buffett, and read and understood the market. And then I asked my dad if I could open a brokerage account in his name and start investing. And he said, sounds good. So that's where I kind of got started.
That's fun. I love that desire that you had. Hey, can I do this?
Yeah.
And your dad even allowing it and even just encouraging you to go figure that out
Oh,
and
yeah.
you continue that learning. That's incredible. And I mean, this really hits home. I have a 10 and 8-year-old boys right now and a 4-year-old daughter. So I'm always thinking about things like this too, like that conversation, those conversations around the dinner table. I'm like, man, how can I spur my kids in thinking that way? And
Yep.
just encouraging them. So love that. A lot to learn from your dad. So maybe I can talk to him sometime. as
That's right. He
well.
should be on these shows. If I could be half the man he is, or my mom, both just so amazing. Yeah, they're amazing parents.
Yeah, yeah, maybe we could have them on sometime, but,
Yeah, that'd be
no,
great.
well, alright, but right now, what about finding this one thing? What is that? Was it during this time that you were seeking this out? What does that mean?
Yeah, so I mean, again, I don't want to dive too in detail on each one because there's so many different stories along the journey. But in 2010 and 10th grade, I cashed out my stocks, it was 80 grand. I'm still farming with my brother. My brother and I took the farm over actually that year when I was in 10th grade in high school. And so I'm farming, I got 80 grand. We were renting my grandparents, my parents' equipment and hauling it to South Dakota to do some custom combining. I mean, I was working at the local John Deere dealership. I was doing anything to make some money. And I found some apartments for sale in Bismarck, and the oil boom was starting to take off just like it did in the 80s in North Dakota. And so I actually wanted to buy them. And that was my first big investment where I actually found out I needed investor capital. I went to my local bank, town of 200 people, asked my buddy's dad, who was a banker, and said, I need a $1.25 million loan to buy these apartments I found about 3 hours away in Bismarck, North Dakota. And I said, here's 80 grand. And he's like, well, you're going to need a balance sheet and like another 300 grand down. And I'm like, oh, geez. Okay. So that's when I went and I didn't have the money for a lawyer because I already put the earnest money down on these apartments.
Uh-oh.
20 grand, non-refundable. So if I couldn't find this money, I'm going to lose 25% of my net worth like that. So I went and printed off the 1956 Warren Buffett partnership agreement, whited the names out, and I started trying to find guys to raise money from in our area. And I found one, and he put in 300 grand, and we went and bought those apartments. And I was
Wait a minute.
10th
How did you
grade.
find this person again?
There's a lot of farmers around the area. I got a lot of no's, but finally I made the deal so good. Someone's like, why wouldn't I? My deal was I'll throw in 80 grand, you throw in 300, I'll run it for free, I'll manage it for free. And if we lose any money, my 80 grand can be first out. So he basically said, okay, like I'll do it. Kind of hard to lose for that deal. And it worked out. The oil boom hit. And when I was a senior in high school, we sold them for over 2 million to the city. They bought them to tear down, and we made about $1 million profit. And I turned my 80 into about 500.
Wow.
Yeah,
Good for you.
it was
That's incredible.
a
So
little
I
rough, but
love the drive. I always point this out in guys and gals like yourself who, I mean, you were really young, but man, you had drive and you were willing to go here no many, many times.
oh yeah,
And even the gumption to go put the 20K down hard before you even knew how you were going to get, you didn't even know you needed more capital at that
no,
point, right? You just thought, I'll go find a loan. I didn't realize you're going to have somebody else come in. And so I just, man, I love the drive to go make it happen. Even all with the work ethic, some of that we live on a small farm, small, very small compared to what you all were doing. But I love the farming lifestyle for kids and everything that's learned and the work
yeah,
ethic. And I just feel like so much that probably come into play here even before you knew it was happening as a
oh
young
yeah.
man.
The
But
unknown lessons that I know now.
that's
Yeah,
right. That's right, man. So 20K hard. The deal went great. You all sold it later. Now, okay. Wow,
yeah,
that went pretty well, right?
yeah. So there I was heading to college, and I had $500,000. This guy wanted to reinvest and pay me this time, right? Like, I'll pay you this time. And I was still farming, but this was kind of what I needed to start that transition. Cause I liked farming, don't get me wrong. For some reason, ever since I was a kid and I was reading about Carnegie and Ford and Rockefeller and Warren Buffett, I always wanted to create something that was worth $1 billion. I don't know why. It's not even about the money. I wanted to create something huge. The challenge to me was so exciting. There's no other challenge in the world I could find as hard. And so I knew farming couldn't be that. That you can't organically grow a farm into because farm is a 2%, 3% returning asset when it comes to farmland. It's a very asset heavy business. Scalability's tough. Like I can go on forever. So anyway, so that's when the guys, I'll put money back with you. And I went to a lawyer and I got a legit private placement memorandum this time. And I said, I want to raise $10 million. So I went back, I threw in my 500 grand. He threw in his 500 grand. And then I went back and when it was raining out around the farm, farming was good at that time. So, and oil was in the area. So it was a really good time to raise money there. And so I just started going farm to farm, and I raised $10 million in about, I don't know, it's about 14 to 16 months. I raised the 10 million.
And wait a minute.
I'll stop there.
How did you do that? I mean, is it just
Yeah.
in this, were all the investors from the small town?
Yeah, in that area, within a 100-mile radius,
And you raised how much?
10 million.
10 million in 14 months.
Yeah. And I was about
And
20, 18, 19.
tell us how you did it. How did you raise the capital? So even this guy wanting to put the money back with you, obviously the first deal went really well.
Mhm.
He had to have some confidence that the next one was going to go pretty well.
Yeah.
Also,
Yeah. Good
uh,
question. I mean, I've learned that people invest in people, not products, right? And so when I was going door to door, it was here's my story. Here's the stock market story. Here's the real estate in Bismarck. And I just said, the one thing about me is I'm resourceful. I I'm a nerd about it. I mean, I literally devoted my whole life from 10 years old to that point. Because by the time I went to raise the 10 million, I actually somewhat knew what I was talking about more so. And I'm learning every day. But compared to when I was 10 years old and 13, when I was 18, I mean, I read every book. I watched Harvard classes online. Like, I knew my stuff a lot more. And these people, for the first time ever, had an extra 1 to 200 grand lying around, right? That was the average investment at the time, 1 to 200 grand a person. And farming was good, and they wanted a way to diversify. And nobody's ever tried to raise money in that area because you got to kind of be a local to know them. And they've never had the extra cash like they had then. So it's just the timing was perfect. So it's kind of, hey, let's throw 100 grand at this kid. Let's see what he can do. Well, you do that 6, 7 times, 8 times, and 10 times a day. There's $1 million a day you're raising.
wow. So speak to, so really, these people, they already knew you pretty well, sounds. I mean, you talk about small. So I grew up in a really small town as well, maybe bigger than the one you are talking about. How many people did you say?
200 was the place I went to school in, or it's 800, 800 people.
Okay.
Yep.
Yeah. I think we were more like 1,700. So we were
Yep.
massive.
Pretty big city.
So we did have a stoplight, A1.
Oh, geez. Yeah, I know.
yeah.
I know that.
So, but it sounds like the relationships were already there. And one thing I wanted to point out there too is that you already had a lot of relationships and you just went straight towards those, as
Correct.
opposed to so many of us when we're starting in this business, we don't go that direction. And we start a brand and we really start marketing in a big way when, man, we already, and that's what we're trying to do is build relationships with investors, right? And
Right.
add value to them, all these things. I mean, we forget the people that already trusts us, right? We already know who we are, that we've had relationships since we were little with,
Yep.
right? Speak to kind of your marketing strategy to some of them. I mean, they didn't know you, but they probably knew you as 10-year-old Andrew or 8-year-old Andrew. And now who's this guy? And now he's talking about investing big money here,
Yep.
right?
Yeah. So I went place to place, sat on a lot of tables and had a lot of coffee and cookies and sat in a lot of shops in their yards. And we just talked. And I talked about, at the time, I was talking about value investing. I was talking about the Warren Buffett play. I was talking about, and the biggest thing they liked was, hey, I'm throwing all my cash in this. I had $500,000 there that I built up from 4 grand, and they liked that. This is my money too. Because if I was going to them and saying, hey, I have no money, I'm not going to throw anything in. Can you give me 100 grand? That's a lot different pitch than, hey, I'm going to throw everything I have into this, which is a 500,000. Here's my story of how I got it. And here's how I think I can do it again and again. No guarantees. And there's going to be a loss here and there, but if we can win more than we lose, we'll be sitting pretty good. So it was a lot of this relationship building and I already knew him, like you said, but I don't know. I just kind of went and did it. And I've never been a guy to think too much. I just kind of pulled up and told them what I was doing and they liked it. And if it wouldn't have worked, I would have pivoted and made it done whatever to make it work. That's always been my attitude.
So what was the next buy or what were you going to do with this 10 million?
Yeah, great question. So I was like 19. We went next and bought a equipment dealership in Great Falls, Montana. Never been there in my life. A broker brought it to me. It started in 1947. We bought it for about $3 million, and the company at the time was doing 4 million revenue, about $400,000 EBITDA. And today, just to fast forward, we hit 10 million in revenue now. And so that company's doing really well. But that was my issue back then. Cause I also want to talk about my successes and the things that I didn't do well is we bought that company. And then we bought some HUD buildings in Fargo. We bought some commercial properties and everything was doing good. But you can tell from my pattern, it was a shotgun pattern. There was no elevator pitch capabilities here. I was in way too many things. I could not tell someone what I did in 2 seconds. And that was an issue. I made a cold call though, and this leads into this. In 2000 and when I was about 20, 21, I made a cold call to there was the top 10 wealthiest people in North Dakota. I called every one of them. The top of the list was Gary Tharalds, and he's our local billionaire. And when I say local, I mean, he did not know me. This whole list was in Fargo, 5 hours away. They had no clue who I was or anything about me. So once I got my family and friends in to build a platform, I then said, okay, I need to now go meet people I don't know and build relationships for the next stage of this business. And the only one that actually gave me some time was the wealthiest, which was kind of fortunate. So I called the secretary of his office in Fargo. I said, you don't know who I am? I'd like wonder if Gary's around, like talk to him. And she said, he's not in, but I'll leave your number and name. And I'm like, yeah, okay. A few months later, I get a call from Gary and we met. We started hanging out like every week or 2 weeks, having pie and breakfast at the Village Inn in Fargo. And he took me under his wing. And now you want me to stop? I don't want to get too deep into the story here.
No, it's incredible that you took the initiative to call even the wealthiest people that you could find, right,
Yeah.
in the state, and yeah, in the hopes that you get to talk to somebody. But incredible that he did call you back. I don't know of him, but it's incredible that he did that, and
Yeah,
sounds like he invested some time with you. So
he did.
go
Yeah,
ahead.
because his quick story is he started in the 1982, lived in North Dakota, born and raised with nothing, and he started printing out hotels. And he built so many hotels that Goldman Sachs bought him for 2 billion or 1.6 billion roughly in 2006. And then he's done a lot of amazing things since. But just a crazy track record. And so, anyways, after getting to know him for a while, and after going down this path of investing in a lot of things, our share price in Abernathy Holdings went from $37,000 in December of 2012, to give you reference, to about $70,000 a share in 2017. And then for the first time, made an investment that didn't work out because I had no focus. I bought into a helicopter company, the fund did. And due to management change and non-control on our end, the thing went voluntarily bankrupt. We did a class action lawsuit and won. We were actually right. The numbers were right. Management was wrong. We won the lawsuit, but we got pennies on the dollar, right? The point of the story is, though, our shares went down to 60,000. So 37 to 70 down to 60 now in 2018. And that's when Gary Tharaldson, after 5 years of a relationship, said, Andrew, you're good at a lot of things, but you're not great at anything.
Hmm.
And that is when myself and the company had a huge transformation and has catapulted us to where we are today.
Wow. Was that like knock you on the ground type of wisdom there?
Yeah, I took it
Uh,
well, but yeah.
yeah, yeah. And how long? And tell me again. You said 5 years. You all known each other about 5 years at this point.
Yeah. Yeah. I would have been 24. Yeah. It's probably know each other about 4 to 5 years.
And how did that change how you went forward? What was the path then? And it
Yeah.
sounds like you had a hard knock, right? And
Yep.
a hard lesson learned. And it sounds like somebody that was way ahead of you spoke some wisdom, hard wisdom, right, into you at a good time. And did that change you? What happened?
Yeah. The story gets really fun now. So again, our shares went 37 to 70 to 60 in 2018. Our company had about a $15 million book value. And that's when I said, okay. So I brought it down. I said, what do I want to do? I said, well, I've been really good at real estate. Like every time I've done real estate, it's worked. So I go grab real estate. And I said, what do I want to do in real estate? And so I had it down to assisted living and self storage. The reason I picked self storage is because self storage was 95% mom and pop owned, very fragmented. In 2018, the major names, the Marriott's of storage, which would be like public storage, and like the Hilton of storage, which would be like extra space, they started allowing third party management that year, first time in history, just like Marriott and them did back in 1982. And I figured that would create consolidation and price management in the industry. And also, it's very simple, easy to build, and you only need one employee per $20 million asset building. So I brought this to Gary, and he said, Andrew, I like this idea. So we jumped on his jet. We went out to California and Salt Lake City and met with Extra Space and Public Storage. And on the way back, Gary said, Andrew, this is your $1 billion idea. So when I landed in Fargo, I started to sell everything, sold everything off, created a big cash pile. The one thing we did keep was the equipment dealership because we wanted to vertically integrate. So the one thing that Gary Tharaldson did was he was his own realtor. He was his own GC. He was his own everything when he built hotels. So we wanted to create our own vertically integrated model. So we kept the equipment dealership. We have our own construction company now, our own garage door dealership, our own development team. And now we are pumping these things out. We're doing 60 million in ground breaks this year. We got 180 million in ground breaks next year. I mean, we're on track to be the largest self-storage developer by 2026. Gary Tharaldson did finally invest. And now he's our partner 50-50. And not only that, Abernathy Holdings has swelled to over $100 million in book value, 200 million valuation between 2018 and today. So we've raised to date over $100 million, including Gary's JV. And I attribute a lot of this rapid growth from 2018 to focus. And yeah, I'd say focus is the biggest thing. I mean, we had a good run there to 2018, but nothing like this.
Well, you had a good run on the very first property.
Yeah,
Right?
yeah, true.
No doubt about it. But it's interesting. I still think that your drive right to the next thing, even though it was scattered maybe at first, is part of the path to your success. And just the drive to move forward, move, and not giving up. And I mean, I hear it after interview, those that are quote successful have that, right? They're driven and they don't care to hear no, as you obviously didn't care to hear, or you just went on and kept pushing. And so I would give us what would you do different? Anything?
I mean, obviously, it'd be easy for me to say, I wish I would have figured out how to focus a lot sooner. But then again, I think I needed to feel the pain that the helicopter company caused me. I needed to feel what unfocus and scatterbrain looked and felt like. Because if Gary would have told me how that feels, me staying focused probably would have been a short-term thing, right? You got to feel that pain. So my advice is to hopefully get somebody to not have to do that, or feel it on a smaller scale. I'm glad I felt it when it was a few million instead of a few hundred. So I don't know if I do anything different. Like, I'd like to say I wish I would have focused sooner, but then again, it might have detrimented the rest of my life. So
Yeah, no doubt about it. If any other, I think too, the listener, would think, well, who's going to listen to me like that? A billionaire like that, right? And speak to building even that relationship. You got that call, and I just think that was crucial, right? You had a mentor, right? You
yeah,
had somebody that had been there and done that ahead of you, and I mean, that was operating at a whole different caliber, right, than you at the time. But he obviously saw something in you to be willing to spend the time and energy and invest in you. And I can say that to numerous people that have taken me under their wing. And I look back and I'm like, I don't know why they did it at the time. Yeah.
yeah.
But I'm thankful that they did see something, right? And that they did invest the time and help me in so many ways. Numerous people have. But what was it about you? What gave him the confidence? Hey, I see something in this guy. And because I just, so many want a mentor like that, right?
Yeah. Well, First off, if he wouldn't have answered, I would have kept calling until someone did, just to have that lesson. And then
Yeah.
also make sure you have mentors that you might like, celebrity mentors. Warren Buffett's a celebrity mentor of mine. Never met him. I really would like to, but I've read every book and I've learned a lot from him too. So you can learn about a lot of people and how they've built success without actually knowing them. But again, knowing one is huge. What he saw in me, I think, is Gary, and I think like many billionaires when they get into that age group, is they really want to share things with the next generation, or most do, right? They enjoy that. They want to tell their story and they really want to see it impact someone's life. Well, I think Gary's told his story to thousands of people. I think the difference with me is when he sat down and told me his story, I took him as actionable items every single day, every meeting we had, and I came back with results, or at least attempts of results. And I think every time I did that, and he watched me grow from where I was to focus and everything. I literally sold everything, moved my family to Arizona, and started focusing just on self storage because that was the right market. Like, he saw me make crazy changes and sacrifices. And like a lot of people he told didn't do anything. They just thought, well, it's a great story. And then they go back and complain about whatever's going on. I didn't do that.
Yeah. They kept doing the same thing they've been doing.
Yeah.
Right. There was no change. So how would you teach the younger crowd now to focus on that one thing? What would be some advice that you have?
Biggest thing's finding your passion, because the odds of success are a lot higher if you do something you're passionate about. And that's why one of my sisters is a teacher. She's not doing what I'm doing. I wouldn't be a good teacher, right? So that's what I'm doing. So as long as you've already figured that out, I'm assuming if you're listening to this, you've already realized that real estate is probably your passion. So check. Now the biggest thing is to figure out how to focus. I mean, I get emails more and more every day now that we're getting more successful on, here's a deal, here's this deal, and it's all different things, nothing to do with storage. And I've had to learn to say no. These really wealthy people are really, really good at saying no, but they say yes when it counts. So when I say focus on something, it's not saying, yeah, just focus on real estate. It is find an asset class within real estate that you can be the best at. I mean, I was a jack of all trades, a master at none. And yes, you can become worth 10 to 20 million dollars and be a jack of all trades. And maybe that's your goal, right? You first need to have a clear goal. Do you want to be worth 10 to 20 million dollars and you enjoy being a jack of all trades because it keeps you excited and stimulated? Great. Then what I'm saying is it's not related to you, right? Because what I'm saying is the people that want to become worth 4, 5, 600 million, maybe even a billion or a trillion some days with inflation adjustments. If that's your goal, you got to go down this lane. Wealth is created on something and preserved on many things. Diversification should not come till later. Even then, one time somebody said, well, what about Warren Buffett? I mean, he's pretty diversified. And yes, he is. But if you look back to when he started in like 1975, roughly, he already had taken control of Berkshire Hathaway. He had blue chip stamps and a few other things. I mean, his holdings were probably in 4 or 5 things, and they were all the same simple business model. He was focused. He now has 80 plus subsidiaries because he's had to tack on with capital inflow over all the years. So if you go, he wasn't a billionaire until he's 56.
Bringing people together, right? You even said before we started that was like a superpower of yours. And when did you learn that? Is it a skill that you learned, or is it something just like you figured out? Hey, I realize I'm passionate about this thing. Did you read some books around how to manage people? What was that? Because it's a skill we all need if we're running a business, right?
No, that's a great question. I mean, there's a lot of different management models. And one of the first people that I fell in love with when it comes to business was, again, Warren Buffett, I mentioned yesterday. And his model was very simple. I mean, he bought companies that had great management in place. Some of them he didn't talk to at all. He just wrote them a letter once a year. Like, if something happens to you, who do you think should replace you? But he just trusted the manager that already had a great track record to run that said business. And all of his managers ran their businesses differently, right? Warren Buffett wasn't saying, okay, all of you change your management models, right? It was a very delegated system, a wheel spoke model, hub and spoke, excuse me. And so that's kind of the model I started with. Grew to realize that I was actually really good at it. I mean, when we bought the equipment dealership, I hired an individual at the time. He was, I think, 34. Luke Stewart came in, tripled the business, and he still is running it today. He's got 27 employees, and we talk every couple times a week, but he's doing a great job. He's passionate. He dreams about equipment. I mean, you can see the passion, right? I would never take him and put him in the construction role because he wouldn't be happy. Could he do it? Yes. But would he be happy? No. Same with the development company. Same with the construction company. We've got 5 different leaders of departments. And I'm there. I'm a good cheerleader. I'm good with meshing it. So in our business, storage, we have a land team that all they do is look for land. They find the site, they entitle it through the city. It takes about 12 months. Well, then that needs to all be passed on, and all the information and all the due diligence has to be passed on to our construction crew. And the construction crew builds it. It takes another 12 months. And we need the rental equipment from the construction company to build it for the construction equipment. And then it goes to public storage to manage, right? All of our buildings are branded public storage. We just own them. The point though here is all of these passionate managers, they need to be able to connect and have the similar vision, right? We all have the same goal in mind. And that has been something that I've been very fortunate and lucky to put together. So
Yeah. Well, I want to back up just a little bit. You talked about the guy that's running your equipment business. You know, he's passionate about equipment, right? I love driving big equipment, by the way. Side note,
yeah.
but but he was passionate about it. And I think it's such a good point, and not said often enough. We're not going to go expect him to go run the construction business, right?
Nope.
And he may be able to do it, but it's very different when it's something you're passionate about, right?
Correct.
And something that you love. And you can just see it when somebody starts talking about something that they're like passionate about this thing, right?
Oh yeah.
Yeah, it's almost maybe a way you find their passion. But how have you done that? How would you say, hey, how did you find him for one? But then even in other parts of the business, other types of business, how do you know that this person's passionate about this thing?
Yeah, so I've met these individuals a lot of different ways. Usually it's through someone. So when we bought the equipment dealership, my mistake was I actually didn't have a manager set up before I bought it. So that could have turned out bad. But I was very fortunate to get introduced to Luke Stewart. He drove from Idaho to Montana. We met once and I could tell that he loved it. I mean, he's been in the industry since he could first work. He's never left it. He was a top salesman for one company, and he's kind of went through the ranks from sweeping floors to management. And I knew it was the guy that I wanted. You could tell he was honest and loyal, and he didn't bounce around company to company. He had a great track record. All he wanted to talk about was equipment. You can just tell, right? If you change the topic or do something, he always brings it back. That's passion. That is a that's subconscious passion right there. Another example is for our when we started in self storage. I said, I don't really know anything about self storage. I should probably find a guy that does. And so I was introduced to Nate Mayhews, and he's been in storage for 15 years. And when he talks about it, I mean, you could just feel the energy, kind of like me right now talking about the business. Like I love it. I'm energetic about it. That's them with what they do. Like they're all different, right? Passion comes in a lot of different packages, but you can see the package. The package is very bright, very obvious to me, anyways. Like passion just shines through, and then trustworthiness and work ethic and all of those things follow. But passion is always number one.
Yeah, love that. Where does Andrew fit in the business now? I want to back this up a little bit. You did all these things, right? And you were successful at most of them, right? You did a great job, but then you had this mentor tell you, "Hey, you're good at nothing," right? When you're trying to do so many things, right? So you focus in on the self storage space and developing self storage, right? That is your one focus. What's Andrew's one focus within that? Because it sounds like, hey, I had to find somebody that was an expert in self storage, right? And you brought in that expertise and that passion about this asset class. What's Andrew's focus in the business?
Yeah. So I mean, every week I talk to each manager, president of each division at least a few times, right? So I mean, just keeping up to date on what bids are. So we have the construction president, development president, got the CFO, controller, we got everybody kind of doing their thing. So my job is to really stay involved. I still have investor relations. So we've got 80 investors in Abernathy Holdings plus Gary as a joint venture. I am fortunate. My wife and I still own 32% of the company. And then our management has prior success. A lot of our management has wealth built from prior success. So they bought into the company as well. So our company, our managing members own about 50% of the company. And so, but anyways, all the other 80 investors reach out and I know the gist of every division. And then obviously if they're short on money or need money, I'm the one that I've raised every dollar. So I go out and raise the money. I'm just kind of bouncing all over the place right now. So it's really fun though, because it's like I'll go into one office and we're sitting there talking about we're trying to get the construction numbers down $8 a foot here, and this is how we're going to do it. Then I'll go into the next one and they're like, hey, we've got 5 sites in in contract for our next dirt pieces, and here's all the ones we have now. Go to the next office, we're talking about banking terms. So I can go on forever, but I'm just bouncing all over the place. And it's a lot
Any
of fun.
other tips around managing all the employees that we haven't talked about?
Actually, the only people that I work with are the presidents. Each of them have their own staff, and I do not tell them how to pay them, how to incentivize them. I have advice here and there if they ask. Our incentive programs are different across each division. The only payment plans and incentives that I set are for each of those presidents that I talk with. The other 30-some employees, I have no connection with. I mean, I
So are
do
they
know
incentivized like in a bonus structure type or KPIs, something like that?
some are. I'm a big believer in the best investments in your people. So when every facility we build, we give away 3%. Some goes to the development, construction, right? Some of their team members. So every 100 we build, we'll give away 3, which is pretty good. And when I say giveaway, we loan it in. So our money plus 10% interest plus the bank debt all has to be serviced, and then they would get their percentage gift above that. So kind of a profit share. And then we've also allowed the level below our presidents, we've allowed them to buy units in Abernathy Holdings at a more simpler long-term payment plan so they can own part of the shares of Abernathy Holdings, which owns everything. So we've done those two levels of incentive plans.
Wow.
And then
Okay.
incentivizes people to want to get there because they want to have access to that.
Speak to meshing these teams around the same vision.
Yeah. So I've been really lucky. It's funny because I was watching this documentary on Richard Branson the other day, and there was a clip in there where they're like the guys at Richard Branson, like, when are you going to get to space for his space company? He's like, oh, we'll be there in 2023 or whatever it was at the time. And then the camera goes to his team, and the team's like, what? We haven't even designed it. Like, we're not going to get there by what? He always does this. And then it goes back to Richard. He's like, this is how I get the team excited. So that's kind of me. The point is I'm the guy that's like, all right, I want 100 of these by 2030. And I tell each division that, and they're all sitting there doing their math. Like the land guys, like, I need to find this many sites. The construction guys, like, I need this many people. But again, they're actually on track. So to answer your question, I don't know how to pinpoint how we've done it, but we have a fun energy around the office. And I always throw out crazy goals, such as the one I just said. And everybody buys into it and wants to do it. They want to see it. They want to build something bigger than them. And I don't call them employees. I call them partners. And that's just what they are to me. And every single one of them is going to be crazy wealthy if we can achieve these goals, and they can do whatever they wish with their capital. But every single one of the people that are presidents, like I've said, they've had past success. So as Warren Buffett says, how do you hire someone that doesn't need to be there financially? Only way they stay is passion. And Warren Buffett's done that. He'll buy a company for $3 billion, and the guy that he buys it from stays and runs it. He's obviously not motivated by money. He doesn't need more money. And that's what I look for. I mean, these guys are here because they want to build something big.
Thank you for being with us again today. I hope that you have learned a lot from the show. Don't forget to like and subscribe. I hope you're telling your friends about the Real Estate Syndication Show and how they can also build wealth in real estate. You can also go to lifebridgecapital.com and start investing today.